I'm gonna second Taylor's comments about Home Depot and Lowe's. And I really wanted to kind of focus on like the bigger picture opportunity, because I think it's easy with those companies because of their size, right? They're like the duopoly of like the mega home improvement retailers in the US. Um, but I think it's easy to miss how much opportunity there continues to be for these two businesses. And in particular, I'm going to focus on Home Depot here because I really think that it's in the better position. If you think about the economics of the business, if you think about the return profiles over the long term that Home Depot has been able to consistently capture, it's just such a wonderful high floor business that is so compelling. And the kind of the three legs of the stool for me for Home Depot. Number one, and this is something that it shares with Lowe's, and that's just the power of its logistics engine, right? Because they are so close to so many homeowners and so many users, end users already, that is just a massive moat, right? And I think it's a bit of a durable moat as well, because I mean, the cost of entry is substantial for another company to try to jump into this same business. It would just be foolhardy, right? To try to add a third major competitor here. And that's why you don't see private equity going after it, right? This isn't something that I think there's going to be a big appetite for anybody to try to do. I mean, that is just a powerful mode. The other two aspects of it have to do with the bigger trends around housing. And the first one is the age of the housing stock in the US. The average American home is about 38 years old, right? That's old, right? There's a lot of homes that need a lot of work. You think about the inventory situation with existing family homes. It's like half of where it normally is. Existing family homes for sale, existing single family homes for sale is about half where it usually is. It's a little bit more than 1 million. It's normally about 2 million at a time. You think about the massive demand to buy homes, there's not enough housing stock, and it's going to take builders forever to catch up. So that means that there's a lot of money that's going to be spent on existing homes to bring them up to standard, to improve them, add the features that people want to have, make them safer for baby boomers who are retiring in place, right? Make the homes, improve lighting, add railing, things like that to make them safer. All of those things are absolutely in Home Depot's favor to continue to do well. And oh, by the way, a ton of people figure out after the fact that DIY project, they need to hire a contractor to do it. And there is no home improvement retailer that has better relationships and does better business with the home improvement professionals than Home Depot. I think you add all of those things up, and that's the kind of the three legs that business stands on. And I think even at its scale, this can be a market beating business for the long term. I really believe that's the case. Love it.
Jason, I've always thought Home Depot is immune to Amazon, right? Yeah. That unlike Walmart, that their market's not going to be hasn't been taken by Amazon. Right. But I think of Carvana and their ability to sell something you wouldn't think could get sold online, cars.
Right.
And I wonder, can they ever be undercut by an internet competitor, or have they already kind of? I'm sure they thought of it. Have they already? Do they do a lot of business through their website? Are they thinking that way? Or
Taylor, I'm glad you asked that, because that's actually one of the things that's become a real strength for Home Depot is, and this is something they started focusing on years ago, is really building out a really robust e-commerce experience that's part of the omni-channel, of really leveraging all of their assets. Again, because this is a company that already has a store within, 20 miles of 90% of Americans. I can't remember the exact statistic.
Wow.
But the vast majority of us live within less than a gallon of gas of a Home Depot, right? I mean, we're all really, really close to Home Depots. So what that means is if you're if you're a DIYer, if you have a plumbing problem, if you want to do a weekend project, there's a Home Depot that you can get to in less than 20 minutes, less than a half an hour, right? You want to order it online, you can order it online and you can go to the store and pick it up. If you want to have it delivered to your house, they already have the last mile logistics there, right? They're already really close to customers. That's a huge lever, while Amazon and so many other e-commerce companies are having to build the last mile, right?
Right. Right.
Home Depot's already there.
They've already got the warehouses. Yeah,
Yeah.
they've already got them. Right. Their
So they have
warehouse is their
leveraged
business.
it is their business, and they have leveraged their physical footprint and built amazing technology to help leverage it. And if you look at, like, let me do this here real quick. I'm going to share a screen share here. And this really emphasizes why I prefer Home Depot over Lowe's. I'm going to split this up by metric, but like, you look on Home Depot's return on invested capital, and you look at its return on assets, it is a substantially high return business. And you wouldn't necessarily think of this for a big box retailer, right? Because those are the kinds of businesses often that margins can seem like they're going to be kind of thin and hard to get, but they turn their inventory so quickly that they're able to generate incredible returns on their invested capital and on the assets they already have in place. It is just an incredible business.
Jason, how big are they now? Or I know they're a mega cap, but I don't offhand don't know what their
Market cap.
Over 100 billion, right?
345 billion.
Yeah, it's more than double the size of Lowe's. Lowe's is about 140, so about 345. Yeah.
Wow. And then my follow-up question: do you think they'll get to $1 trillion? And it kind of sounds like they will eventually.
Eventually, yeah. I mean, here's the thing. So I think you've got a dividend yield that's modest but pretty good, and a great track record of growing the dividend. I think in terms of total returns, also this is a kind of a share buyback focus too, right? Taking that free cash flow, invest a modest amount back into the business as necessary, return the rest to investors in dividends and buybacks. Really getting to $1 trillion. I mean, I think that's like a 15 to 20 year thing. But you start in terms of increasing per share value, dividends and share buybacks means that it doesn't have to be $1 trillion company to still be a 3x, 6x kind of investments, over the next, 5 to 10 years.
Cool.
Yeah. Ari, any thoughts on this space?
No, it's really interesting. I would like this as a dividend play. It's very secure. The dividend payout ratio, when I looked, was like 50%. So they're basically signaling there's a lot of cash they don't need. So I think it's a good play to secure your wealth and play on the economy, and just a staple of American business essentially.